All right, so welcome back, guys. So this is the second to last concept, the payroll. Of course, payroll is, when you have employees, right? So one thing that we have to consider when we create our own business is you can't do everything by yourself, okay? Unfortunately, as a sole proprietor, right? You think you can manage your whole company by yourself? Think again. You will be needing the extra help, especially when you have that one rule, right? Especially with internal controls. If you guys remember from way back when, from chapter 1, we talked about internal controls and how not if you're the president or the owner of the company, you yourself cannot be the one that does the bookkeeping at the same time. You must hire a separate individual person to be able to take care of your books. Because if you and the business are one, therefore you can fraud yourself, which isn't a good idea. Okay. Now, many people, yes, they do, take advantage of the tax break. Right. You get a nice tax break if you can submit to the IRS that you are a business owner. All right, and once again, it's a tax deduction. However, there are some rules and guidelines. You can't just assume you have a business and pretend that you can go on with your life and just take the taxes right off of the taxes that you want. You actually have to run the business. You actually have to start generating income. And of course, if you guys, this is like way back when in chapter 1, we got to take a look at if you are going to establish yourself as a sole proprietor, the rule is you have to make profits 3 out of a 5-year span, or else your business becomes a hobby. And then if it becomes a hobby, you're going to owe the IRS lots of money. So there's lots of rules and guidelines. Doing business is not something you want to take lightly on. It's definitely something you have to be very, very serious and commit to it. Okay. And with that, of course, you need to hire some individuals to help you run your business. So therefore, you are going to take a look at payroll. Okay. Now, as much as, payroll can be a tax deduction to you, right? Because if you have employees, that only benefits you because you get to write a couple tax write-offs for having employees. However, one thing they don't tell you is that if you're going to have employees, they cost a lot of money because not only do you have to pay them every time they come to the office and work for you, you're obligated to pay them. If you don't pay them, they can sue you. Okay? And you definitely don't want to go into that kind of business, especially if you're a small business. You want to make sure that you have enough money to pay your employees. Because if you don't even bother, even having employees if you can't even afford to pay for them. All right? So there's a few rules and guidelines that you need to know. Obviously, the first one is you need to figure out what is a good compensation for them, right? We talked about how the minimum wage for Nevada used to be $8.25. It is now increased to, I believe, $10.25 now, right? That was back then, back then, maybe like a year ago, before the pandemic happened, it was $8.25 for 1 hour. That's the minimum wage. Now here it is, now that's the pandemic and, people are encouraging to get their jobs back. They're compensating at $10.25 an hour now. Okay? You need to find some kind of middle ground to allow to be able to afford your employees by paying them either some kind of steady rate or you can choose a salary rate. Okay? Now, not only that, you also have to consider what taxes it costs you for having employees. All right? And we'll talk about what those are. You also have to figure out, in order to keep your employees to stay and working for your company, you need to offer benefits. Okay? And of course, any deduction that can apply for your employee. Those are going to be the number one things, and we're going to talk about each one. Okay? Now, first off, oh,
When,
yo, go ahead.
excuse me, you have a dialog box in the center of your screen.
Okay. Okay, it's gone now. Thank you.
Yes.
All right. So now that we talked about just having how you're going to basically pay for the taxes. Well, in order to do that, you need to first apply for a business or what's called an employer identification number, right? An EIN. Now, if you're a sole owner of the company, you can use your social security, but once again, with the whole rules of keeping your business and your personal separate, it's general rule of thumb that if you are a sole proprietor, you should go ahead and apply for an EIN. Okay. Now the difference between a social security number and an EIN is pretty straightforward, right? Social security, it's it's distributed by the Social Security Office itself, this Social Security Administration, right? And again, it is meant for individuals. So any independent contractors, they're going to be known by their social security number. Okay? Where an employee identification number, right, is something you have to apply for through the IRS. Okay? So there is a form, right? It's the next slide, on how you can obtain one. But let's take a look at the difference between the two, right? The social security number, right? It's 3 digits, 2, and then the last 4, and it has your full legitimate name on there, your legal name and XYZ, right? This is the most important kind of thing to keep your identity, right? Same thing for an employer identification number, right? It's another way of looking at an identity. But however, as the employer number, it goes 2 digits and then it goes the rest of the 7 digits. This allows you to separate yourself as an individual and a business, and it allows the person to the IRS to be able to take the proper taxes from from whether you're a company or whether you're an individual. So again, that's the difference between the two, and it's most recommended that you do go file to IRS for a separate employee identification number so you can file your business taxes and your personal taxes separate. Okay. However, once again, we know this for a fact. If you are the sole proprietor, sole owner of the company, not only do you get a tax deduction on your business taxes, you also get to take one off of your personal taxes. Okay. Just a little FYI. Okay, so how do we apply for an employer identification number? This form right here, you can obtain this from the irs.gov. Okay, so once again, the IRS, the SS4 form allows you to apply for a legitimate employer identification number. Okay, and again, it is used for primarily for employer and employee taxes. Okay, so we'll talk about what employee taxes look like for having employees, and also the taxes that you must withdraw from their checks that you have to pay the government as well. Okay, so once again, that is also one of the things that you need to know about this. This also allows you, right, with the employee identification number, it allows you to also file for taxes, especially when you have specific special taxes. So, for example, if you sell alcohol or tobacco, those are a special tax, right? If you're a grocery store, that's also a special tax because some of the items are taxable, some of them are not. So it's very important that you do have some kind of employee identification number or apply for one, because not only are you limited to the employee taxes, you're also involved with the sales tax that you owe, any local taxes, state taxes, whatever it is, right? They're going to use your employee identification number to be able to file for it. All right? So it's very important that you do file for one. And again, the SS4 form is usually what you're going to find on the irs.gov. You fill out the form, submit it, and you should be able to get a legitimate identification number for your business. Okay. So then let's talk about employees. All right. Now there are 6 types of employees. There's actually more than 6, but of course these are just the more common ones that you would normally see here today. But if you go to irs.gov, you'd be able to find the different types of employees that go beyond these 6 categories here. But like I mentioned before, these are the 6 that you actually currently see right now. Okay? And the one that we want to make sure that we keep focus on is going to be the first 2, which is the common law and the statutory employees. Those 2 employees are the only 2 that are going to be paid on your payroll system. Okay? Everybody else, you're going to pay them as an expense. All right? You're not going to take any taxes off of them. You're just going to pay them as a straight expense, and they have to deal with their taxes on their own. All right? The 2 that you see here, statutory and common law, are going to be the 2 types of employees that you're going to be filing taxes for, and you're going to be paying tax for having them. All right? So let's go ahead and dive right into the very, very first one, which is your common law. What can they do? Well, first off, your common law employees are your regular employees that come into the office. They do a 9 to 5 shift, and they're done, and they have to come to your office on a specific date. So what can they do is basically you're giving them the instructions on how you want the job done. You're telling them when they have to work. You're telling them what they have to do, how to produce the end result, and you're going to provide the materials for them to do their job. So basically, this type of employee, right? They cannot go beyond what they want to do. They can't just be given materials and be able to, provide the service or whatever it is and say, here's the job's done. You tell them what to do. Okay? So that's the common law. They don't have much, leeway or, They don't have much control of what they can do because the employer tells them exactly what to do and how to get it done and when to get it done. Okay? So again, this is definitely your common ones are going to be anybody that works a 9 to 5 Monday through Friday. That's it. They come in and they leave. Okay. So once again, they are given a specific task, and they're given a specific time to finish it by, and they're given the materials to complete it by. Okay. So again, how they perform is going to be what's different, but everything else, right? The task is given, when it's completed is given, and et cetera, et cetera. So once again, a common law, they don't have much leeway on whatever they can do, right? They're given a specific task and they must complete it at a certain time. So that's the real difference here. And of course, with this, we mentioned many times before, it's your regular worker that comes in Monday through Friday, works their 9 to 5 shift. Okay. Any questions on your common law? Okay. Then the next thing that we have are your statutory employees, right? Now, what are your statutory employees? They work for you, right? You give them a specific task. You give them, a specific time to complete it by, and you tell them when to do it and how to do it, right? So these ones, the only difference is that they don't have like a specific day that they have to come in and work. Usually they're given a special task that could be a week long, a day long. It just depends, right? What the task is. And for them, it's any person such as a truck driver, right? you work for the company. However, you don't have to come in every single day, right? Your only task is to deliver something, or maybe you need to pick up groceries from the warehouse and bring it all the way back to the store. So your only job is to complete that task, right? The company provides the truck, the company provides you the task, right? They tell you what to do, and they tell you specifically when to do it. But the thing is, the time behind it is going to vary, right? Especially when it comes into the delivery truck, right? You can't expect, okay, I want you to pick up this and be back by 10. No, it just depends, right? So in this kind of sense, you're statutory employees, right? It still acts as if you're doing like a common law, right? You're being told what to do. You're being told exactly how you want it done. However, the only difference is you're not mandatory to come in a specific date and time. Okay, so these ones are more off of the kind of what do you call it? The spectrum where you don't have to come in a specific time at a specific date. You're just given a task and you have to complete it. All right. So, any questions in between statutory employees? Okay. Okay. So here we talked about the difference between a common law and the statutory employee, right? Now here's another difference between them. Okay. So this is talking about how we tax these type of employees, right? Since we know that these two employees are what's going to show up on your payroll, right? One thing you need to know the difference too is that for a common law, you need to withdraw or withhold their income tax. Okay? And you also have to withhold taxes for FICA, which is your Social Security and your Medicare. Whereas your statutory employees, you do not need to withhold their income tax. You only have to withhold their Social Security and their Medicare. Okay? Because it makes sense, right? A truck driver, if their job is to only come in maybe Tuesday, Wednesday, and Thursday, right, to just pick up a shipment and bring it to the store, they're not the kind that has to clock in every day. They're just given a task, and they're just given how to do it, right? And of course the date when. But again, the time between that they spend to drive, right, is not going to become something that they can earn a lot of income for, right? It's very minimal, especially, that kind of job. It's not as super labor intensive, but again, you're spending more hours and you can't predict how long that person's going to work for. Okay? So that's another difference here is that even though they both are on your payroll system, because you still have to pay for their FICA tax, which we'll talk about what that is, right? You pay into their Social Security and you pay into their Medicare. The only difference is that your common law, you have to withhold their income taxes, where the statutory, you don't. Okay? So that's just the real difference when it breaks it down on calculating their taxes that you have to pay for them. Okay? Now, of course, we're going to be primarily looking towards a common law type of employee because, again, that's usually majority of your people are going to be most likely a common law type of employee versus a statutory employee. Statutory employees only comes with specific types of businesses, so such as grocery stores. They need these kind of statutory workers, right? Where if you have a small coffee shop, a statutory employee is not really going to make sense. You don't need someone to keep delivering shipments to you when you can have someone employ you and they can just grab, whatever, or have shipments just sent to their store, right? A small company would more likely have would have common law type of workers, whereas a larger corporation can have both common and statutory. Okay. Any questions for common law and statutory? So, of course, I'm going to also talk about the other four different types of employees. However, they technically they're not really employees. They're just under the assumption that this is that they work for you as a company, right? And the other four I'm going to talk about is going to be here, which is your statutory non-employees and your independent contractors, right? Now, of course, these two kind of go hand in hand, right? But the only difference between them is that one of them, right, is going to be your independent contractors, right? They're more on an individual type of ordeal, right? The company provides them the time, right? They give them the task. They give them the supplies and whatever materials that they need to get the job done. And the only difference here is that the independent contractor, they get to determine how the results is done. So for example, a office that's full of doctors, right? The overall organization, right, will be the hospital, right? They provide everything. They provide the room, they provide the materials. Obviously, the doctors don't come with syringes and stuff like that, right? So you can assume that the result of the individual person, right, to get the job done is going to be based on that individual. So again, a doctor, right? You can go to 4 different doctors in that office and they're each going to give you a different result. That is the independent contractor, right? They just get the one thing is the result. The end result of the task is determined based on the individual. So they can do whatever they want, right? Okay, so great examples are going to be doctors, dentists, vets, right? Any kind of like office that has those individuals, like a law firm, right? You can have this guy be an accountant or a lawyer, and then you have another lawyer in the same office, but the difference is they provide different results. Okay, so that's an independent contractor, and for them, if you do, okay, decide to have independent contractors as part of your people who work for your business, right? They must provide you with their social security number because they themselves are the individual independent contractor. Okay, they can apply for a employee identification number, but most likely independent contractors, they use their social security. Okay, any 1099 worker is going to be considered a independent contractor. If more other, they can claim as self-employed or whatever kind of status that they want to claim on their 1099. But the most important thing is they are given a task, but they get to determine how the result is. Okay, so if you do those kind of have hire independent contractors, most likely you are going to write them a check and they themselves have to file their own taxes. Okay, so that's an independent contractor. So then let's talk about what a statutory non-employee is. So once again, it's similar, right? The only difference is that instead of having the end result being dealt with, they themselves, these statutory non-employees, they kind of like a sales representative. All right, they're the ones that you're gonna provide the task, you're gonna provide them when to do it, and you're gonna, or actually not when, you're gonna provide them the materials to get the job done. You're gonna tell them what their job is. However, this one, right, statutory non-employees get to determine what hours they want to work. So that's the difference here. So this one is they get to determine when they want to work, where your independent contractors determine what the end result's going to work. They can also determine when they want to work too, but most cases, independent contractors, they kind of want to get the job, so they'll take whatever opportunity that they have. But for this one, right, the statutory non-employees, they get to determine when they want to come in to do the job. Okay, so for example, a real estate agent, right? They don't need to be in the office every single waking moment, right? They don't need to be there exactly at 8 o'clock. They can come in whenever they like and their only main job is to sell a product or sell a service, right? Same thing with direct sellers, right? Anybody that's a sales representative, right? They're individually based, so again, you can apply. They can apply through the 1099, but they would claim themselves as X status, not an independent contractor, right? They're two separate things. But however, they are going to be considered expenses as well, as and they have to take care of their own taxes at the end. So yeah, they just get paid for whatever amount that they worked for, and they have to be responsible for their own taxes. So again, this one is they get to come in, they get to determine whatever the time that they come in. However, the end result, the task that they're given, and the materials are all provided, right? And that's the difference between a non-statutory non-employee and an independent contractor. Okay, one is based on time, the other is based on result. Right? Any questions between these? Now, again, of course, if you do end up deciding which one you choose to, right, make sure you do extensive research on it because, again, tax is very important when it comes to deciding what kind of worker you want to be. Okay, especially you definitely want to be someone that's covered as well because if you are a statutory non-employee or an independent contractor, you are responsible to set up your own retirement benefit. No one can do that for you. Okay. Any questions? Yes.
Okay, now the 1099 is that say the independent contractor would fill out. Is that something they fill out and send to the IRS?
Correct. When they fill out their taxes, but also if they claim themselves as a 1099, right? Most cases when you apply for a job, you have to state that whether, obviously, if you're given the, the difference between given the W-4 form versus a 1099 form, right? If you are an independent contractor, you must provide the 1099 or the 1098 form to your employer. They must fill that out and you submit it to the IRS.
Okay, because I know that you said that when you hire an independent contractor, they must give you your social security number. So I was just wondering how you reported it and how they reported it as far as for the taxes.
Correct. They have to provide the 1099 form for the employer to fill out. Okay.
So as the employer, then you would fill out the 1099, give it back to them, and then you're done?
As the employer, yes. You fill out their 1099 form, right? Because we're claiming that, okay, we contracted that, we wanted their service. So that means it's proof that, we run their social security number to verify that they are indeed a 1099 worker, and that when we file taxes or pay them, right, they can claim from us a W-2 form, or no, not a W-2 form, but the 1098 form. They can request that from the employer, proving that they can, when they file their taxes, that they have the record that they worked for this company. Okay, and again, I'm not a tax expert. There's a lot of taxes when it comes to especially the different types of employees that you have. Okay, so once again, if you want to get educated, I would recommend you to go to irs.gov and read that whole Publication 15 thing on the website, and you'll get even more insight. Okay, but as an independent contractor, right, you must provide the employer your 1099, have them verify that you are indeed working here, or if you contract with them, right, you might have to sign a complete separate contract that validates, oh, okay, well, I'm going to have you just only work for me for this year, okay, whatever it is, and we can renew your contract the next year. There's a lot of works when it comes into applying as an independent contractor. But the one thing is that you're going to get a straight check. You're going to receive all your money at once. You're not going to get withheld any taxes. Okay? and then you're responsible to file to the IRS all the money that you've claimed, and you have to pay into your own tax at the end of the year. Okay. All right. Okay. Any other questions between the statutory non-employee versus the independent contractor? Okay. Last but not least, we're going to talk about temporary agents versus leased employees. Or, sorry, excuse me, leased workers. Okay. So, here's a little background. When you go into applying for a job, we have what's called temporary work agencies. And what the big companies do is they pay the big bucks to these headhunters to look for these individuals to work for a temporary project for the company. That's pretty much it in a nutshell. Okay? So for accounting, there is a temporary work agency. It's called Robert Half. Okay? If you guys are familiar with that, they do provide temporary work. So if there's a project that a specific company needs, they post it onto Robert Half, and they have Robert Half go look for those people. Tell them, hey, there's a job available, right? So what you're actually doing is that you're working for the temporary agency. They're the ones that's going to be paying you, not the company. The company is going to just write them a huge check saying, here's the money. I need you to find somebody to work for this job. Here's what I'm planning to pay for them. And then the temporary agency is going to look at it, take the tax cut that they need, and then they pay you after that. So you're going to agree to some kind of pay rate between you and the temporary work agency. So you could be accepting a job for $15 while the major corporation is paying you $25 an hour. So you want to be very careful, especially when you go for a temporary work agency, because the downside of it, it's not a permanent job. You're literally going to be jumping from project to project to project. And the worst thing is you're never going to be fully benefiting at all. You still have to pay your taxes at the end of the day, because the temporary work agency, they don't file taxes for you. You got to do it all yourself. So it's definitely, it's definitely a great way to gain experience and get your foot through the door in the type of work field that you want to get yourself into. However, the only bad thing is that the temporary work job could be a month long, could be 6 months long, could be 1 year long, and then that's it. It's terminated at the end, and you're going to have to be applying for another temporary job. Okay? Now, that's the temporary work agency. Now, the temporary work agency and the leased workers, right, they can go hand in hand, because I know that a lot of companies, especially the major corporations, not only do they pay the temporary work agencies the big bucks to find these employees for them, the leased employees are basically going to be, they take the people from the temporary work agency, they write special contracts with them, and then once they completed their project, they can choose to buy out the temporary work agency's contract out and employ them permanently. So again, these two can work hand in hand, especially with the major corporations right out here. So here in Vegas, right, we got MGM, we got Caesar's Palace. Those are, really big casino type companies that hone in on these temporary work agencies to find people to work for them. And then at the end of their term, they can choose to buy out the contract. All right. So a lot of things happen there. But then again, it's also depending on the company that you work for. Some people work at the temporary work agency for, 2 or 3 years, and they never get contracted by the company, and they wait on that company because, again, sometimes you need, in order to climb up to that ladder, you need to prove to them that you can be an asset to the company versus someone who's just doing the job and getting it done. Okay, so that is a huge difference between a temporary and a leased worker. However, most leased workers come from temporary work agencies. Okay, so that's the only difference there. Okay, and once again, they do not pay their workers, they pay the agency, and the agency pays the worker, where the leased ones, they do, in a sense, kind of pay the workers, right? They tell, okay, if you're going to work at this company and I'm contracting you, they give them that bottom line and they send it to whoever is the contractor, and the contractor pays them. So at the end of the day, you're never getting the money directly from the company. You're getting it directly from whatever agency that you've gotten it from. Okay, so that's the one that you normally see here in Vegas. Once again, if you are planning to try to get your foot through the door, okay, I would recommend you to go check it out. Just see how it's like to work in a real accounting area. Okay, so try Robert Half. All right, and yeah, good luck on that. If you want to just see if you fit into the accounting realm, Robert Half is a great way to start. And of course, if you can prove that you're an asset to the company, they might actually buy out their contract and employ you permanently. Okay? Any questions between a temporary work agency and a leased employee?
So are they paid under a 1099 then?
No, not a 1099. Yes, they do. Because on the 1099, you can choose whether what kind of category or type of worker you are. Right? You could claim yourself as an independent contractor, self-employed, etc., etc. And yes, they do pay you as a 1099. Yes. Okay, but remember, it's the temporary work agency that's paying you, not the company itself. Okay.
I have a comment. When going to work for any type of like temp agency, I highly suggest read everything that you sign, because I had gotten in with a company that wanted to hire me full time, and the temp agency didn't want to release me. And so for those terms, I would have had to quit the temp agency and wait 6 months before I could go back to that company and work for them full time.
Yes, so there's also that do not, I forgot what it's called, the D. It's where if you quit a certain company, you can't work for that company for a specific amount of time. Right. But yes, unfortunately, yeah, and that's why the company has to buy out your contract in order to release you from the temporary work agency, in order for you to actually become a leased worker. Okay, so make sure you do read those fine prints. Okay, all right.
Yeah, the temporary agency didn't want to release me basically because I had so many multiple skills that they could place me with a lot of their, clients. And that's the one girl had told me. She goes, "That's the reason we're not releasing you." She goes, "If you want to quit," she goes, "that's fine." She goes, "But you have to wait 6 months to go anywhere." And I'm like, okay.
Yes. Okay.
So.
All right. So yes, please read that fine print, because once you dive into a temporary work agency, yes, unfortunately, whatever you sign, you're contracted with the temporary work agency. Okay. So again, you want to make sure that you read those fine prints, especially when you're dealing with contracts. Okay. It's going to be legally binding the minute you sign it. Right. All right, so now we're going to talk about the process. All right, what does it mean by the process? So we talked about the two types of employees that would appear on your payroll, right? Everybody else are going to be considered expenses. All right, so we're primarily focusing on two types of employees, right? The common law and the statutory employees. Once again, this is more commonly for a common law type of employee, right? Your regular 9 to 5, Monday through Friday type of worker. All right, so here we're going to have to take a look at the steps, right? We're going to be dealing with what the employee has to go through, and then we got to deal what the employer has to go through. So once again, that's why it costs so much for having employees, because not only do you have to pay for them, you got to pay for their taxes, but you got to also have to pay for taxes for having employees. So that's double the tax that you're going to be having to pay for. Because once again, you're going to withhold their tax. They're not going to claim that money. So therefore, you're holding on to their money that they worked for. And you're responsible to pay in for them. And then you're responsible to match them if you have that type of contract, or you offer that you have to match them. Okay, so so you have the employee standpoint and you have the employer standpoint. So once again, we're going to go through all these steps. So we're going to go through determining the salaries, right? Then of course collecting the W-4 form. That's very important. Then we got to determine, right, what the pay period, how much are you going to compensate them for, how much can they earn, what deductions, what benefits do you offer. And then last but not least, you're going to actually start calculating their taxes. So whether it's a federal tax, the federal income tax, etc. If you have state income tax, right? And then of course you're going to record the payment. Okay. And of course on our other side, right? So when we come back from the break, we'll take a look at the employer side standpoint of what taxes that they have to pay for having employees. All right, so let's go ahead and dive into the very, very first one, which is letting your state/local agency know that you have employees. That's why you need to do this. It's a long process to start hiring your employees, especially when you need to fill out every detail. Because if you are a company and you're having employees under the table, that's a big no-no, okay? Because you can get fined for that. So you need to let the IRS and the state organization, so here in Vegas, we know what it is, right? It's the Nevada Department of Employee Training and Resources, also known as DETR. Okay, but specifically in the section for the new employees, for the new hires. So once again, it is DETR. Okay, there here in Vegas, there's only that one little agency here because Vegas is pretty small. Okay, so our Department of Employee is going to be the DETR. Okay, at the state of Nevada. Okay, now what do you need to turn into them is the company's version of the W-2 form. Okay, so the company has a separate W-2 form and the employees get a separate W-2 form. Okay, so make sure you know the difference, because this one, the W-2 form that you have to submit to the IRS and the state agency is you're going to file to them a form. It looks just like this, and what it does is it gives them basically who you need to write down all the information that's involved with your employee. So number one is what's your employee's full name. Second is their social security number and how much are you planning to pay them. Okay, and there's some details where you have to fill out what position they are applying for or what you've given them and what tasks that are involved. But most cases, these are the standard three. You need their legal full name, their social security number, and you also need to determine how much you pay them. So once again, this needs to happen, okay? Anything extra, such as a background check, okay, a drug test, all of that are going to be separate. Those are company policies that you may set. But the number one thing is you need to let the government know that you have employees by submitting a W-2 form from the company that lets them know who are the employees, how much you're paying them, and etc., right? Once again, background checks, whether they're a criminal or not, or whether you need a drug test them, are going to be separate, and those are company policies, okay? It has nothing to do with the IRS. Okay? Once you've done that, then the next step is to collect W-4 forms from your employees, okay? So let's take a look at this, okay? So here we have the W-4 form. So I'm going to go ahead and take a quick second because I'm going to show you right here it is. Now, if you've ever filled out a W-4 form before, right, which you guys have, it has significantly changed, okay? The last that we've done, right, that's 2019 version of the form, and prior years for that are all identical. They started changing the form as of 2020 because the government found out, hey, with the vast majority of people like doing second or third or even fourth jobs, right? Whether you're a stockbroker, a Lyft driver, Uber Eats, those are going to be considered extra income that you can claim. And guess what? The government wants you to just file it all in one piece of paper. So instead of filing 4 different separate W-4 forms to every single employer, or a 1099, right, in that case, they want you to just file one and one only, okay? So here's the new W-4 form for 2021. Same thing, standard, right? You're going to identify your name, right, your social security number, and so on and so forth, your address, of course. And then the second thing is you're going to claim what kind of status do you belong into. So once again, if you guys remember back then for your W-4 forms from 2019, every single one is going to be considered a withholding. In this case, they already categorized for you and say you can only claim one out of these 3. You're either single or married filing separately, or you are married but filing jointly, or you're the head of the household. You don't get to claim withholdings anymore. Okay? So the difference between the 2019, which is the last one that we before the change, so 2020 and 2021, you can claim withholdings. Here, your withholdings are determined by the dollar value. So then again, as much complicated as it is now, right? So once you fill out that part, section 2 is going to be including any extra income. So if you're married, whether you file together or file separately, it's still considered a household income. So you're going to have to state it no matter whether you claim together with, I think you do claim together. If you do claim together, then you have to file in their amount that they earn. So, and your spouse's income or any additional extra income. So if you have a second job, a tertiary job, right? You're going to have to claim it here. Okay? And you're going to claim how much you earn. Okay? So section 2 is all about extra income that you're working with. Okay? And then section 3, if you have dependents, okay? Or if you have children and you want to claim them, you claim them as a dollar amount. You don't claim them as as one withholding, right? Because if you guys remember back then on the 2019 form, you can claim up to 10 children. In this case, you can only claim up $2,000 per child. Now, that's very low per child because I know for a fact a child does not cease to hold $2,000 per year. Okay, they're way more expensive than that. But the government lets you take a little nice tax break and lets you hold $2,000 per child per year. Okay, but that's only if it's a child under the age of 17. Okay, it used to be 26, now it's 17. Okay, and then you can also claim anybody that's a dependent. Doesn't have to be your children. It could be a cousin, right? Someone that lives with you that is a dependent or someone who's disabled. You can claim them as a dependent, right? And they only go for $500 per person per year. Okay? So once again, this is definitely something you want to look into. Okay, because it's a little different. If they're no longer withholdings anymore, they're considered a dollar value. So you definitely want to take a look at that. So if you want to claim any children or claim any dependents, here's the guidelines on how much it is per person per year. Okay.
So you can only claim them till they're 17 now, not 18?
It's yeah. It says right here to the age of 17. Well, in California, you can claim them up to 26. Yeah.
So it's different state by state?
No. It's going to be. This is a federal form. So it used to be 26. Now it's 17. Yeah, I know.
So they're still in high school and now you can't.
Yes. There are some rules and guidelines that you can do. So again, if they're disabled, you can continue claiming them for however long. Or if they just live under your household, or they could just be considered dependent instead of 17. So you can claim them to the maximum of $2,000 if they're 17. But again, if they are still living under your household and they're older than 17, you can claim them as a dependent. If they're living in the same household as you, they do kind of not work or whatever it is, right? You can claim them as a dependent at that point. All right. But for this one, I don't know what the age limit is. Definitely something that you want to research. But you would have to change them from a child to a dependent at that point. Okay.
There's not an age limit on.
I believe there is. Like I said, in the state of California, it used to be 26. So I don't know what it is in just in general. That's definitely something you may have to look up in the IRS. I don't know. A lot of the books change. So again, this was one of the changes. So if you looked at the W-4 form from 2019, you're still claiming withholdings. In this case, you're not claiming withholdings. You're actually calculating a specific amount. So you may have to go on the irs.gov and figure out what the actual number is. But for dependents, I just know that if they're still living under the same household as you, but they're older than 17, you can claim them as a dependent more than a child. Okay. All right. So that's that there. Okay. And then we have section 4, which allows you, again, to have any additionals, whether it's income or whether it's deductions. So this is in case for those who have generated income, whether it's through stocks. Okay, stocks, bank bonds, right? Whatever type of income that you have that's extra, an IRA is going to be extra income. You're going to have to claim it here in this section for section 4, right? Any additional deductions. So whether you're a homeowner, you can take a deduction there, right? There's a lot of deductions that you can take, but once again, these are going to be enlisted in the book for the IRS. So again, seek a professional for this, okay? And then of course, the last thing here is any extra withholdings, okay? And then once you tally up your claimings and whatnot, then you submit this to the IRS, okay? Now, for this type of form, since it's brand new and it's more complicated now, they decided to make it even easier for you by just accessing the internet and just answering the questions. So if you read the form, it tells you that you can visit the online website to go ahead and help fill out your W-4 form. And this one's even cool because if you go to this exact website, you can even adjust how much money you want taxed or have your tax refunds. So they even help you do that. So if you go to the irs.gov, all right, so I'm going to click on that, right? And here's the IRS official website. You're going to go click on forms, okay? So forms and this right here, so you're going to click on here. Once you click that, you're going to get this window here. And this is what I'm talking about by, oh, I didn't even click it. It's coming. There you go. Tap forms. There you go. So once you go here, you have what's called, if you go down here, this is the wrong form. We're going to look at form W4, W9. It should be at the very top. Okay, we got those. W2. Okay, so here you're gonna have you have the instructions to do that, but you also have what's called the tax. Forgot what it's called. It's the tax generator. Okay, so WSS4, W7. It's called the tax break generator, or it allows you to help fill out your tax forms a lot more easier. Okay, I'm just looking for the W4 form. Where are you, W4 form? Okay, I don't see it on here, but it should be on here. But it's called the tax generator, or the tax income estimator. And you click on that, and you're just going to answer all the questions. And what happens is at the very end, it tells you how much tax you're going to be filing, how much, and then you can adjust it to see how much tax you actually want to receive at the end of your refund. If you want a zero refund and claim all the money as possible, it's going to actually generate you a W4 form for you that you can print out. It has all the information for you with your individual, the things that you place in there. And it will also give you basically a pre-filled out information that allows you to take the maximum deductions with a maximum amount of benefits that you can take or even claim. All right. And that's what's really cool about that. I don't see it on here, but it is called the tax estimator. And it should be under the W4, which I don't see it anywhere here. But we talked about the SS4, right? How to apply for the employer identification number, right? And yeah. Yep. So once again, it's called the tax estimator for the W4 form. All right, and it allows you to, once again, claim whatever taxes that you want to claim, and so on and so forth. Okay? Oh, that's so weird. They don't have the W4 form. Oh, right here, W4 form. Yes, go ahead.
Now, okay, when as a company, okay, I hire someone and I must file the W-2 form. Now, what determines whether I file it with the IRS, the SSA, or the State Bureau of Employment?
Okay, so remember, SSA is not going to be an agency. Your Social Security has nothing to do with this. It's going to be, you're going to file to both the IRS and the Department of Employment. Now, you can go through the Department of Employment because usually they will file it to the IRS for you. But most cases, just to be for sure, when you claim that, so then every time you go to the Bureau of Employment, right, they recognize that you are having employees and that they're looking for the money that is supposed to be taken away from the company, right? It informs the state, and it also informs the federal, because you may need to pay state taxes, right? So depending on what state that you live in or that your business is in, you may be subject to state tax. So that's why you need to make sure that you file the W2 form to both the state and the federal agency, which is irs.gov, right? You can just file it directly online. Okay. Now, I'm not quite sure about Dieter here in Nevada, but because like right now the office is closed. But I'm not quite sure if they still do any online type of accepting any type of online forms or anything like that. I just know that you can still like apply for like the basics of like a business license. Those things are still there. But I don't know about filing to them. I don't know if you can still do that. Right now, they should be opening up because right now it's a big race for of employment, right? A lot of people are getting hired right now. So, those agencies need to prepare for that. But yes, so I guess the IRS page slightly changed a bit, but you're going to get what's called the estimator. Okay, and that's going to allow you to help you fill out the W-4 form for 2021 with ease. All you do is just answer a series of questions, and it will pretty much fill out your W-4 form for you. Okay. Now, in most cases, your employer should be more knowledgeable about this. They should be able to help you answer the questions and be able to help you fill out your W-4 form with you because, once again, right, the question is based on what do you want to claim, right? Of course, the employee is going to want you to claim nothing so they can tax you the maximum amount. But again, if you are serious about wanting to claim the maximum amount of money and not pay a lot of taxes, you have to be very careful on that because sometimes the company that calculates the withholdings for you, right? At the end of the year, when you file taxes, once again, you may be subject to having to pay more than what the company has already taken away from you. Okay, so you definitely don't want to be careful on how many items that you do claim, right? You don't want to, you definitely don't want to, cheat the government because they're going to come after you, right? All right. So any questions in regards to that? So once you go to the website, you can explore all the things that you need to explore, right? Anything about the employees, taxes in general, business taxes, it's all here on this website. You just go ahead and click on the forms that you need to look for. Okay?
I have
Go for it.
So when you start a new job, you have to fill out both the W-2 and a W-4?
Okay, so no. If you're the employee, your only responsibility is to submit a W-4 form to your employer. The employer, they are responsible to fill out the W-2 form to the local agency or the state and to the IRS, the federal. Okay? So we're looking at both standpoints because we're looking at us as a company, right? What we have to do when we come into the conclusion of having employees. But we're not looking at the employee standpoint. I'm just telling you because you guys are going to be employees. If not, possibly you might also maybe consider opening your own company. Then you also want to know the other side, which is the employers. So the whole purpose of this class is we're looking at the employer standpoint and what you need to collect from the employee, which is the W-4 form of whatever individual that wants to claim whatever they'd like for their taxes. Okay. All right, any other questions? So once again, the new W-4 form, right, is it's a lot more complicated. And if you use the estimator, it will save you a lot of time. Okay. Yes, it will save you a lot of time. Okay. So once again, you can download this on the irs.gov. That's exactly what I did. I just downloaded it, PDF version, and it's even fillable out. So instead of having to write everything out and making it unlegible. So same rule applies here. If you make a mistake, they're going to make you redo the form. So you're better off to typing it out and submitting it digitally. Okay. Yes.
Question. So this is for the employee withholding. As an employee, you don't gotta verify their kids or nothing like that, right?
Oh, no. They don't no because that's the IRS's job. Yeah, if you claim 10 children but you don't have 10 children, you already know the IRS is gonna audit you. Okay, all we're responsible is, okay, you submit to me a W-4 form and you're claiming 10 children. Okay, the company doesn't know you don't have 10 children. They
Okay.
can they
So that takes the liability. The liability doesn't
Exactly.
fall on us.
Exactly, especially because not only does the company has to file the W-2 form, right, and provide it to you guys, you got to file your own taxes too, so you're definitely don't want to meddle with that. Okay? So if you claim 10 children when you don't really have 10 children, the government's going to come after you. Okay? So, yes. And don't think that you're just one in a billion, because if they find something odd with your taxes, they're going to definitely come after you. Okay? But if you lay low and just say, "Oh, I claim this many children," then you may get away with it. Okay? Not saying I'm not supporting, but there's a lot of things out there that you can claim that not many people actually know. And yes. Okay. All right. Any other questions? Okay. Also need to know too is, if you do not file, okay, the employee, right? If the employee does not file a W-4 form to the employer, you can assume that this employee doesn't want to take any deductions out, so you can tax them at the highest percentage, which is at 0 withholding, 0 claims, or 0 nothing. So that means you can tax them to the highest bracket, okay? Because they failed to submit to you a W-4 form, and they're continuing to work for you. So if you want your money, then, I would recommend to send in a W-4 form. But if you already know you're single, you're like 20 something, you're single, you got no kids, you got nothing for you, and you know what I mean, then you're gonna automatically have to pay that tax. Okay, but at the end of the day, you get to have a huge refund at the end. So it kind of pans out at the end of the day. But for those of you who do have those, extra claims and withholdings that you can take, why not claim it? Okay, especially nowadays, right? You're working for your money. The best that you should do is probably claim as much money as you can. Okay. All right, so the next thing that we got to talk about is determining what the payment period is, okay? So you can pay them daily, you can pay them monthly, you can pay them weekly, bi-weekly, semi-quarterly, whatever it is, right? You can claim them as much, however, you can pick whatever one that you'd like. Now, most common one that you would see is either a daily, weekly, or bi-weekly. An example for daily is that if you work for Uber or you work for Lyft, you can claim your earnings at the end of the day. So that's considered a payment that you can do daily, right? Most common ones that are usually a company, you typically would normally pay your employees weekly or semi or bi-weekly or semi-monthly. So the difference between that, okay, weekly you get 52 paychecks. Bi-weekly you get 26 paychecks. Semi-monthly, right, you get paid on the 15th and the 30th, you only get 24. Okay, you only get paid twice a month, right, semi-monthly, where bi-weekly is every 2 weeks, and there's 52 weeks. So you get an extra paycheck, an extra 2 paychecks for the odd months that have 5 weeks. Okay, so these are the more common ones that you would normally see. Rarely you would see monthly. Monthly is more of a government thing, right? If you receive any benefits from the government, you're most likely going to be paid on a monthly basis, right? A monthly payment. Quarterly, I've never seen someone wait 3 months to get their money, or every half year or annually. Now, of course, usually they'll give you an estimated annual amount that you can earn, but how frequently pay you would be determined on how often you work. But they only use annually to give you like an estimated amount that you can earn for the whole year. So most job applications, right, they see that you can earn $36,000 per year, right? That's just an estimated number. But what you're going to do is when you go to the company and you figure out what kind of payment plan you're on, right? You could be semi-monthly, so you could be paid on the 15th and the 30th, or you could be paid every 2 weeks, or you could be paid every week, okay? So that's pretty much the difference there, okay? And how often you pay your employees will depend. And on top of that, it's very important that you have enough money to pay your employees, okay? So once you determine what the payment frequency is, or the payment period, now we have to determine, first of all, what kind of compensation you're willing to pay your employees, right? Are you going to pay them as a wage rate, or are you going to pay them as a salary rate? So salary, right, you're going to give an annual estimate, right? Break it down by how many paychecks that they are, and you're going to give them that paycheck every single paycheck, right? You're going to give them that amount every single paycheck. Whereas your wages, right, it's based on how many hours you claim per week or per whatever it is, pay period, right? So again, wages are based on how many hours you can claim. Again, a few things that you should know too is the only exception to this, right? We talked about how the wage rate, right? It's based off of the state minimum wage that you can earn. So as of right now, it says right here that Nevada was 8.25% to $8.25 per hour. That has significantly increased, like I've mentioned before earlier, right? It's no longer $8.25 now because of the pandemic. It is now $10.25. So you got a nice $2 increase. Awesome. Cool. So with that being said, again, it really depends on what the company is willing to pay you. Okay, most cases, like the bottom line is they have to pay you more than $10. Okay, that's the state minimum wage, right? You can claim more than $10, right? But then there's also exceptions or exclusions to that minimum wage. Okay, so if you ever worked for a company where you can receive tips can be considered something that you can include into your actual earnings. So if your tips are claimed, then you can actually give a minimum below than whatever the minimum is. Like, for example, right? A cocktail waitress, they can earn the baseline of $8.25 because they can earn tips, which makes up like probably a good chunk of their earnings, right? And if it's claimed, which most cocktails or any kind of casino worker, right? Most of their tips are claimed as income. Okay. Other examples could be anything that could be for like professionals or anything like recipients of opportunity wages. So once again, anybody that claims extra money or extra benefits, they can actually they can let you work for less than the minimum because you're earning extra money separately, and these are all claimable things that can go towards your income. Okay. Of course, other earnings could be overtime, right? Usually that could be anywhere from 1.5 to 2 times, especially for those who do night shifts or anything like that. You can offer bonuses and commissions, right? Those are all going to be considered income that you can earn, okay? Or extra opportunity for you to earn more money, okay? Whereas salary-based workers, right, usually like we've mentioned before, you're going to be given an estimated annual amount. And what happens is it doesn't matter how many extra hours you work or whatever it is, you have a minimum that you can claim, right? So usually, if you are a weekly worker, your minimum is 40 hours a week. And if they do offer overtime, the basis line is if you work over 40 hours, then you can start claiming overtime. But again, most salary workers, right, it doesn't matter when they work or how they work, because they're going to be given the same paycheck every month. Okay, or the same amount of paycheck because they're considered a salary worker. Okay. And once again, with salary workers, other things that they can claim too is any bonuses or commissions. They can do overtime pay. But then again, there are 4 different types of, workers that that they can kind of claim for the overtime. So other than that, that's what you can compensate your employees for, whether they're wages or salaries. These are the most common 2 that you could pay your employees. Okay. Then we're going to talk about what kind of benefits that they can receive from your company. So we talked about just paying them in general, compensating them, right? That's what they can earn. Now, if you're the company that allows them to either have a deduction or a benefit for it, right? What those can include is any fringe benefits. So if you work for a company, right? A fringe benefit would be getting discount tickets to a specific place. So for example, if this corporation, right, I'm going to use Quest Diagnostics for example, right? Because they're such a big, huge company, they're used across, the world. Okay, they are a biotech lab company, right? They test blood and specimen. So they're such a widely known company that a lot of other companies, they invest into Quest Diagnostics or they're partnered up with them. So what happens is that when you are a worker of Quest Diagnostics, you get fringe benefits such as discounts to telephone services, right? You can get a discount for AT&T. You can get a discount for Cox. You can get discounts from AAA. Those are going to be considered fringe benefits. And of course, fringe benefits are not free for you. You kind of have to pay a special fee for that. So whether you do pay into your fringe benefits, it could be an automatic deduction, like a membership fee. But yes, those fringe benefits, it's because you're working for a company that offers these discounted items to you that you may need to pay into it. Okay? Other benefits could be holiday pay, right? You can get paid for time off on those special holidays. So Christmas, right? Here in Vegas, that's hardly a thing, right? Especially in the casino life, right? If it's a national holiday, you work that day, you're gonna get paid no matter what. Okay? You can't get paid to take that day off. You might even get for some casinos, they actually dock you points for that if you take a holiday off, which is pretty ridiculous because, if you're working in the casino life, unfortunately, holidays is where you make the most money, right? The casinos. So they expect you to work through your holidays. So holiday pay is probably not a thing. However, vacation pay, right? They can offer to pay for your vacation, right? Sick pay if you get sick. They even offer retirement benefit plans such as a 401k plan. That's usually common with corporations or big companies. They offer to pay into the 401k. And other ones too includes insurance, whether it's health, dental, vision, whatever it is, they can offer that kind of benefit to you. However, it is a deduction to your paycheck. They I know that you do pay a monthly payment, right? And they either the company can either pay half of it and you have to do a copay, or they can cover the full visitation fee if you, depending on what kind of Medicare that or medical insurance that you pay into. All right. So those are all going to be considered benefits slash deductions from your paycheck. So it could be things that are taken away from your paycheck to go into these types of benefits. Okay. Other things too is how do you record your earnings? Once again, right? You have a check-in, like you can submit a timesheet, submit a login. If you have a clock-in tower, maybe you can do a punch-in clock like the old style. Okay, you can go into a computer and just say that you signed in, right? Whatever that is, nowadays. Whatever it is, some kind of way that you're able to document that you have proof of time. Once again, that is definitely something that in order for you to help you record your time in the company, right? Claim your hours, especially if you are a wage worker, right? You definitely want to make sure that you clock in on time and you clock out exactly whatever amount that you're going to claim. Okay? Any questions here? Okay, so now we're going to talk about employee taxes. Okay, so I'm actually going to stop here. Let's go ahead and we'll take a 15-minute break and then we'll come back and finish the rest, okay? 3:17.